Good day, viewers, and welcome to another broadcast of Global Capital Inc. online radio and television. I want to encourage persons from across the region and the world who are tuning in to get involved with the conversation that we're about to have. Today, we're talking about the importance of equity capital, and we have someone who has a tremendous history and background in this field, and is no other than Mr. George Edwards, who is the General Manager for GAS-C. The acronym simply means Guyana Association of Securities and Securities Companies and of Intermediaries, Inc. For short, that acronym also represents Guyana Stock Market. Welcome, Mr. Edward. It's such a pleasure to have you here today.
Thank you, Gary. Thank you for having me.
All right. I want to begin by pointing out some positive movements that I'm seeing on the stock market. While we recognize that our market capitalization stands a little below $2 billion US, what is very interesting that over the last 4 months, over the last 6 months, in spite of the fact that we are in a pandemic, we have been seeing that capitalization has been increasing month over month. Is that a reflection of the confidence of people in local businesses?
Yes, it certainly is. Actually, the market value in US dollars is a little bit more than 2.5. We're just on the other side. You said it below. We've crossed over.
It crossed over. Interesting.
Yeah.
That is good.
Yeah, and it shows, to my mind, it shows confidence that investors have confidence in the companies listed in our market, that they are going to continue to make greater profits, and in some cases pay better dividends. So investors are happy, but I think there's an element of speculation as well.
Okay.
In that nearly everyone has a picture in their mind that with oil and gas, Guyana is going to become so much more prosperous. People will have lots of spare money and excess cash that they will want something to put it into. Rather than leaving your cash idly, investing in something that will work for you. You know, as you say, you're worth for your money, then put your money to work for you.
So we certainly have to amplify that part of the conversation where we are talking about putting the money to work for you. Definitely. All right. I do believe that this subject matter is absolutely necessary. It's long overdue based on the fact that you've just mentioned Guyana and oil. I do believe that Guyana, from the perspective of oil, that has the potential to transform the entire landscape of Guyana in more ways than one. But I do believe that as we speak about transforming the landscape and leapfrogging the economy, of course, access to capital is becoming more and more necessary to add to the conversation. And you represent a major portfolio, and that is equity capital. The next question that I want to ask is, what are those pre-qualifications for a company to be listed as an IPO, where they're now able to benefit from your good office and gain equity capital to grow, diversify, scale, and perhaps integrate their business across region and the world. What are those pre-qualifications?
Well, there are now the full list of requirements for listing can be found on our website www.gasci.com. But some of the important ones is that one, the company must be incorporated in Guyana under the Companies Act, or if it's the company has been incorporated in another country, it must be listed on that country's stock market, stock exchange. Some other important things is that they must have a trading record on the substantially the same management. Normally, you would ask for 3 years financial statements of profitable, 3 consecutive profitable years, of course. There are rules as to how much of the company shares must be in public hands. One important thing that I need to stress is that the shares must be freely transferable. But as I said, the full gamut of requirements are on the website.
On the website. All right. Talking about the pre-qualification criteria, one of those pre-qualification I have seen as I peruse the website is that the company must be liquid, at least $500 million GYD, or at least 2.5 million USD as part of the pre-qualification criteria to be listed. While I recognize the importance of this, from a local standpoint, is this bar little too high for the smaller entrepreneurs who might be aspiring or want to access this, equity as a means of accessing capital? And is there any consideration that you think should be given to revise this?
Well, you're right. It may be a little bit too high for younger, smaller companies to list on the exchange. But historically, though, what happened was that when the exchange was set up, most of the companies that are there now were grandfathered on because they already met those requirements. Okay. But you're right. Now that if we want to help younger, smaller businesses, we need to have a second look at revising those requirements to allow for younger companies to access the market and therefore get capital that is required to grow. And I can assure you that we are looking at it. Oh, so maybe what will happen is like in Jamaica, I think Trinidad and Barbados, you have what are maybe termed junior markets, where the requirements for the big board are relaxed to allow for smaller, younger companies.
I'm very happy to know that from your vantage point, you are proactive in terms of identifying new ways of accommodating the smaller businesses into your portfolio to access those capital. The next question I want to ask is, how important is equity capital to Guyanese businesses' competitiveness? And just before you ask, I just want to point out a few distinctions. Equity capital, as we know, is different from debt capital. Debt capital, you have monthly debt obligation. With equity capital, it's different. All right. But you would give us a deeper insight into the importance of equity capital to businesses and their competitiveness.
And so from an, let's say, a supplier creditor investor's point of view, the fact that if the company is heavily geared with a lot of borrowing, then it may be it may not be that attractive to potential investors. Equity capital, on the other hand, while in the initial stages, it may cost a bit because you have to hire professionals, maybe accountants, lawyers, maybe an investment banker. But once you've gone past that, the advantage of equity capital is there's no interest factor that will bog you down. Secondly, you don't have to pay or declare a dividend until your company is in a strong position with profit-wise. So for the years where the company is young and needs support, the management may decide not to pay a dividend, but later on, when the company is strong and making good profits, then they can make up, in a sense, by paying, better dividends.
Okay. I really love what you would have said, and what it does, it creates that window where the excess or the profits, instead of it being paid out to interest or being paid out immediately back into dividends, it could be reinvested into the company, which gives the company a greater chance to grow, diversify, and scale, and reach that point where it can be more profitable. And I think that, having pointed out that, I do believe, taking into consideration that many business startups have we call a growth curve, a 5-year growth curve. Equity capital can be a pretty interesting talking point here. And I do believe that education and information can play that tremendous role in helping the entrepreneur to understand the real significance behind equity.
Well, Gary, we've had this conversation about the importance of education to lift the level of financial literacy in the Guyana and in the Guyana context. You want for investors to be able to look at a set of financial statements.
Yeah.
And while they don't have to be accountants, at least they should have a certain level of understanding as to what those figures in the financial statements are telling them.
Yeah.
And I can tell you that GASKI and its staff and our directors have been, we've held seminars to try to spread this type of knowledge. We visited and we've had sessions with service clubs like the Rotary clubs, Lions clubs. We've done sessions with both campuses, Tain and Turkine campuses of the University of Guyana. We've visited high schools and done talks. We've hosted at least one high school. And so we've been trying our best. We've written articles in the newspapers. So we've been trying to spread that knowledge But any help you can get in that direction will be welcome. So we hope that you and others like you will join the task of trying to spread financial knowledge, and raise financial literacy.
Oh, definitely. We are fully on board. And as you talk about financial literacy, I'm going to take this opportunity just to share some information. You know, one of the things that we have done over the last few years, we have studied how the international stock market would have developed. And one of the things that we are seeing is that while you may have high net worth individuals, super high net worth individual, you know, sovereign wealth funds, and a range of other portfolios that contribute to the equity capital space, what we have seen is that the private individuals, they are a major player in investing in the companies which are able to raise the capitalization. One clear example is that what we have seen, particularly when we look at the New York Stock Exchange market, is that at the start of this revolution, they didn't only start a stock market, but you had a very strong credit market. You had personal credit and business credit. So the average citizen were able to go to the credit market, take out a credit at perhaps, and they're able to get here 6 months, 12 months, and 18 months, 0% APR, which means that they're not paying interest on the credit that they're getting. With that access to capital, they take it and they put it into these companies that are listed on the stock exchange market, and they're able to walk away 3, 4, 5, 6, 7, 10% dividend payback at the end of a given period. And that's how many of these companies are able to cash flow. Let's take, for example, you put $1 million on a particular stock at 10% dividend yield. That's $100,000 you're walking away with at the end of the year. And that, in many cases, is more money than the average American is working for. So as we amplify education information around this, as you said, you know, the biggest dream is that Guyanese can see that the local stock exchange market perhaps is one of their best friends, because dividend yields can pay much higher than interest on various accounts. But we will go deeper into that as time progresses. So we are definitely a part of that conversation and that information process. The next question I want to move on to is, what are risks, the known risks associated with equity capital, and how can they be mitigated?
Okay. Well, I can tell you the worst risk is that company that you invest in fails.
I know.
Then you lose all your money. Right?
Yeah.
But there are other risks involved. If the company may not fail, but they experience a fall in share prices. So you may, if you buy at $10 and then the price drops and bottoms out and levels out at $5, then you've lost some money. But of course, businesses have, unlike economies, have cycles. And so what you may find is that prices may fall at some stage. But if you have faith and the company has a strong, capable team with a good business model, in time, they rise again. So for the long haul, while you may in the short term, you may experience a drop in price. In the long term, but research has shown that generally share prices tend to rise, and therefore, in the long run, it's a better investment than putting your money lying down in a commercial bank. Money in commercial banks will lose value over time because of inflation. And you know, I like to say, I'm not the original person saying it, but you work for your money, you put your money to work for you. Currently in Guyana, for instance, the interest rates that you get from commercial banks are generally much lower than the average rates that you get in the stock market.
Yeah.
The other thing for the Guyana market is that dividends are tax-free. Currently, the government can always change that, but currently, from the time we've started to now, in 2003 to now, dividends have been tax-free, while the interest on bank that you get from your bankers attract a 20% withholding tax.
Yeah.
The other thing, the other advantage you have in the stock market is that there's no capital gains tax applied yet. All right, as I said, the government can always change that. But so if you buy a house on land or a car, or you sell it back for the profit, you'd pay a 20% capital gains tax on the profit. But if you did the same thing in the stock market and you made that same profit, it would all be yours because currently it's tax-free. And the other advantage is that businesses tend to pass on the effects of inflation to the consumer. So to some extent, if you're a shareholder in that company rather than just a consumer, you are somewhat, the effects of inflation are somewhat reflected or softened because you get back some of that money as dividends.
I agree.
Right. So, so the other things that you can look at is that a company may not declare any dividends. So that's another risk. You can invest in a company that refuses to pay dividend. However, it may be offset by an increase in share value, which means that your net worth increases at the time. And a company may do some restructuring and at the end of the day comes out less profitable than before. And I would like to say that the fact that some companies may have, say, a reversal in fortunes may not necessarily mean that they have poor management. Sometimes things happen in the external environment beyond their control that can affect the company negatively. Like, for instance, the government of the day deciding that they're going to raise tax on a particular product.
Mm-hmm.
Once the taxes are raised, then the price to the consumer is raised, and that may result in lower sales, for instance. Lower sales means lower profits and may result in lower dividends or no dividends at all.
Yeah, I agree.
Right? So those are some of the risks. In mitigation, well, the regulators have a strong role to play. One, as you mentioned earlier, to ensure that the company has enough capital or shareholders' funds to be able to cushion any reversal in fortunes. If the company has to fail, that the investors will not lose everything. That there'll be enough capital there to clear off all, most, if not all of their liabilities and have something left back for shareholders. But and of course, from the regulator's point of view, information is key. So the regulator and the laws and regulations that are in place will ensure that the reporting issuers, the companies whose shares are being traded, that the share information, particularly information that will affect prices, they share that type of information in a timely manner so that investors can make informed decisions. In other words, you want a market that is fair, that is transparent and efficient, that prices that we see are reflect of all available information as soon as it happens.
Yeah.
So the regulators play that kind of role, and we have to remember that the laws and regulations are in place as well as the regulators to ensure that there's protection for investors. I hope that answers your question.
Yeah, certainly you did. I just want us to touch a little bit on the fair, some of your experience in interfacing with small companies, family-owned companies. As you set out to, I know you talked earlier on about the education that yourself and the representative of the merchant bank would have been involved with. You've seen some of the, people, family-owned business leaders, they are very protective of what they own. They'll hold it to the chest. Do you see that changing anytime soon? And what are some of the foreseeable risks if that attitude towards business is maintained?
All right. Just let me say that GASKI's, the stock exchange's approach to education is two-pronged.
Yeah.
We look at it from the education, trying to educate the investors, which we talked about. We've done seminars and visits. We welcome people. And let me just say that we have noticed in recent times that we are getting more and more queries from younger people, which is a good sign.
Yeah, I certainly agree with that. I certainly agree.
And then from the other side, from the investee side, we have gone out along with the Guyana Americas Merchant Bank, and we have visited a number of strong family-owned businesses. We've pointed out to them that some of the things that happen. Most of these people tend to educate the children abroad because they can afford to. In many cases, those children go into disciplines totally unrelated to the family business. After that kind of education and exposure to metropolitan life, many of them don't come back to Guyana.
That is so true. So true.
Much less they get involved in the family business.
Yeah.
So what we find is that the matriarchs and patriarchs of those businesses, as they get older and slow down somewhat, find it difficult to keep these businesses running as efficiently as they did when they were younger. Our point of view is that, look, you've taken a small business and you've made it grow into a stronger business with much more value. So we have been saying to them, look, particularly if your kids are not going to come back to help out, go public. And there are benefits by going public. You cash out. You made an investment not only in money but in energy and ideas over the years, and I dare say emotions, because you must have had sometimes may have experienced some frustrations,
with
etc. So now you've got a strong company. You can cash out, sell some shares to the public. You can keep enough shares that either have influence over company decisions or enough shares to have control. 51% will do because you can be outvoted. But one of the things we like to point out to these companies is that you may be making $20 million a month in profits, but it does not mean that your company is operating optimally. You might very well be leaving another 20 million on the table. Why? Because your policies and your business model may not be the ultimate one. By going public, you can still have your experience as part of the decision-making process, but you kind of bring in new talent, qualified people with newer and fresher ideas, and maybe better understanding of the market, because the market now maybe have more young people than older folk that the matriarchs and patriarchs were accustomed to dealing with.
Yeah.
So, right. So younger people coming in with more qualifications, better understanding of the modern market, may come with and introduce methodologies that can make those companies become more efficient and hence more profitable.
I agree. I totally agree. And I think as you do that research, we've seen that many of these companies, they are not functioning at their optimum best. One of the things that we talk about when we're interfacing with these companies is something that we call market research and market intelligence. And as we talk about this, one of the first things that we try to zero into is one, your target market size. From your target market size, we are now able to predetermine the potential of that market to cash flow. And sometimes when we say to a manager that, hey, you're only representing 5% of the market based on your cash flow, they're like, you serious? But that lies the need for market research and market intelligence. With that kind of information, you can better position your products, your service, your brand into the market and leverage innovative approaches to cash flow the operation. And of course, you need capital to do some of these things. To do research is capital intensive. To build out a product or a service with relevance to your target market requires, the right intelligence, and hence the need again for equity capital. So I do believe that the role that the stock market can play to help these companies to access capital. And of course, you have spoken about a number of different issues here where the fear factor can be reduced because they're not giving away 51 or 55% share in their company. They might be given 20, 30, 40%. They still maintain 60. So they still have the last decision in terms of how the company is managed. Another quick follow-up question on that. With foreign direct investors coming in, they're coming with capital, they're coming with technology, they're coming with human resources. And I do believe that the natural way and how they accustomed doing business in the developed world, if companies become complacent and remain complacent with the way that they're accustomed doing things, I believe that they can be boxed in, they can be squeezed in, and by default pushed out of that market. This to me hence the need for an amplified conversation and education model to really help businesses to start understanding how to transition from this mom and pop, from this family and base operation, and really leverage the tremendous opportunities that the local stock exchange market can give to them?
Well, you know, our experience here is that we find that there's greater and greater interest by foreign-based investors in our companies.
Mm-hmm.
So our Guyanese people may, like that company we talked about, maybe leaving money on the table.
Exactly.
Right.
Exactly.
They are not seeing the shining, the diamonds or the jewelry that they have, and others are seeing it and coming in.
Exactly.
Well, but this is where I'm happy that you are getting involved in trying to spread this type of information to the Guyanese public, because I mean, knowledge is power. The more you know, the more you understand what we have here in Guyana.
Exactly. You can utilize it.
One of the things that you find, I often tell people here is that yes, you can invest in other countries' markets, but I find that, to my mind, the Guyanese market is much more stable in terms of price movements than companies abroad.
Okay.
All right, and hence, I think Guyanese investors should put their money. They work for their money. They should put the money to work for them.
Okay.
Here are opportunities. The banking system is not paying that rate. The banking system, the interest attracts 20% withholding tax. Dividends on the stock market are tax-free.
Okay.
All right. And inflation, when there's inflation, the effects of inflation are passed on by these companies to the consumer. So if you are investing in these companies, you buy shares in these companies, to some extent you buy yourself a cushion against effects of inflation.
Mm-hmm.
Because you might pay a higher price, but you get back some of that money by way of dividend.
Yeah, I love that. I think that you have made some valid points. The last question I want to ask you now is, what are the future, how do you see the future of Guyana's economy and businesses accessing equity capital? At the moment, I don't think there is. What are those barriers? I mean, for businesses to access. One of the things that you point out that you're currently revising those entry barriers. What timeline you think? Another 4 or 5 years? It might be changed, making it more easier for businesses to access equity.
Well, I don't think it's going to take that long here, because we are actively.
I'm happy to hear that. Okay.
All right, but of course, changing those requirements means that we may be exposing potential investors to more risk, and we have to balance the investor protection as against the chance to make some money by way of investment carefully, because what we don't want is to unleash poorly run companies or poorly or inadequately capitalized companies to the invested public. We have to ensure that we protect that public, while at the same time trying to ensure that younger companies, small companies, can have access to a pool of funds.
I think
and if you look at the banking system, they have been it has been extremely liquid for the longest while.
Yeah.
So there's spare money that investors can channel into more profitable investments.
I agree. I think you've made a number of valid points there. I think as you lower the barrier of entry, it creates some exposure for the LP, limited partners who are going to be invested in those stocks. But I do believe that we are smart thinking people, and it's important for us to bring, business support organization that may have a background in debt mitigation and risk management to the table that can help in that risk mitigation process. We at Global Capital Inc., of course, as we talk about debt, capital, equity capital, credit capital, we try to look at it from that holistic perspective where we're seeing the portfolios that exist. We are identifying smarter ways to access those portfolios, smart ways to leverage those portfolios, and most important is smart ways to mitigate debt. And by debt mitigation, what I mean is that we're identifying ways in which we can bring down the cost of interest associated with debt capital. We are looking at ways in which we could minimize the risk at both sides, both the LP and the GP, general partners, limited partners, because there are risks at both sides. And I think as you dive into risk mitigation strategies, it allows you to understand the market, and in understanding the market, you identify the enablers, and the enablers are those key elements that will ensure that the brand cash flow. Cash flow is key in any form of business.
Oh, yeah.
And it's to build out relationships with those key enablers. That can come from public sector and private sector. So there are ways in which we could mitigate the risk, and I do believe that as we amplify the education, elements of what we're doing here, it will bring some of those fears, that the genuine fears and concern that people have, down to a minimum. There's so much more for us to discuss, but at least we are breaking the ice here. Let's call this our icebreaker as we lay that groundwork to really raise the level of intelligence of the public in terms of the equity capital space. But I do admire the tremendous role that you're playing in equity market. I do believe is a tremendous role. The biggest business in the developed world, they are able to leverage your portfolio. And I'm just waiting for that day when businesses across the board locally can certainly become a member of your portfolio. Any last words of advice?
Well, the only thing, as I said, for young businesses, business persons that are listening, or owners of small businesses, there is a pool of funds that you can tap into.
Okay. Yeah.
Once you meet the requirements.
Yeah.
For investors, you work hard for your money, now put your money to work for you. Because many people, research has shown that many people join the workforce from high school, never making any investment decisions, and then they arrive at retirement date and suddenly realize that there's going to be a cut in income. When that happens, then you're faced, I guess, with two immediate alternatives. I have to cut back on my lifestyle because I no longer have the same income, or I have to go back to work if I want to maintain that lifestyle. And generally, At that age, you can't compete with young people for the better jobs.
Too late shall be the cry.
Right. And many people end up going back to work as security guards when they should be probably be at home, relaxing and playing with their grands.
I really
Right?
love that, you know. So,
But I'd like to take this opportunity to make one appeal. I don't know if you feel the same way,
yeah,
but I find that in the Guyana market, we don't have too many independent analysts who look at the company's performances and give written opinions, so that, let's say, uh, the less financially literate can at least say, but look, Gary Thompson's an expert and this is his opinion, you know, and to help to guide their decisions in terms of their investments.
but
I think we need more of that.
yeah, I have to agree with you. And you're right, we don't have enough. And that is something that we are definitely preparing for. And the role that we intend to play is not only to look at what we call the front end analytics. The front end analytics is where you look at perhaps the historical financial data of those companies, and you know, you do a forecast based on historical data. But what we want to do is to go to the back end. We want to know who is your team dynamics. You know, we want to ensure we look at your corporate culture, because for us, the organization culture plays a tremendous role on the business being sustainable. How is that culture designed to impact the workforce? How is that and an impact in the workforce? We look particularly at how does it reduce absenteeism and staff turnover, because all of these things affects the how you position the brand to cash flow maximize to get sustainable income. So when we go to the back end, there's a range of different things we look at. You know, how is the brand being built out to impact the specific target market and impact the general public? So there's a range of things that we're looking at as time progresses, as we get it more involved in providing information and education to the public. These are the kind of things that we will be looking at. Perhaps we'll take some of the companies on the stock market or some of the companies that intend to get onto the stock market, and we can do this broad analysis on them to help to raise public confidence, trust, and credibility in those companies.
As you're spearheading this kind of movement,
yeah,
I want to suggest that you have some chats with SEBI, the School of Economic Business Innovation.
Yeah.
And because I think they are changing the approach to the way we educate our undergraduates. There was a time when you got the impression that we are being university students were being taught, not only in university schools, university, we're teaching people to go to work for other people. Right, but now we want to change that that kind of approach.
That is not only
to become their own business persons.
I agree. I mean, I do believe that kind of conversation is not only a local reality; it's a global reality. Not that there is anything wrong with it, but we have to acknowledge the tremendous role that CB has set out to do, which is to nurture innovators and creative thinkers that can help in the leapfrogging process of Guyana. So you're correct. We have reached out. We will continue to reach out to key sectors across Guyana and the region, to ensure that we can get everybody involved in this conversation and to add, value to this kind of conversation that we think is necessary. I'm happy that you have mentioned CB, because that is one of the brain basket for the business community and the economy as a whole. And we definitely need to know what they are doing and try to amplify those positive intention that they have. So we have work to do moving forward, a lot of work.
Right. Well, the study name suggested School of Entrepreneurship and Business Innovation.
Yeah.
So for someone like you spearheading this kind of movement and furthering education, business education, maybe you should tie in SEBI.
Certainly.
I'm sure Professor Lucas would be interested.
Well, I honestly trust that he feels the same, because we will continue to reach out to him and pick his brain, in terms of the great vision that he has for the institution, and certainly, give him this platform to share with the wider Guyanese how we see his vision can transform the thinking of Guyanese, and by extension, contribute to that leapfrogging process. Because work has to be done, and work has to be done now. All right. Guyana, we have oil and gas. We have to do our best to extract as much as this as possible before we move to that clean energy grid. We, in the process of doing all of that, we have to simultaneously think of that clean energy grid. We have to think of that leapfrogging process, infrastructural and human resource development, and ensure that perhaps some of the cream of the crop coming out from CB can be, some of the persons spearheading that, of course, with some of the, the more senior thinkers in Guyana. We have a lot of work to do moving forward, but I'm happy to be a part of that process from the perspective that Guyana has moved from a developing economy now to a middle income economy. And, like the great book, Great Expectations, we are truly trusting that we can become one of the high flyers in like some of the top companies that we have in the world. And I do believe that we can do it. As we learn, from the great book, if we believe it, great things can happen.
Sure. Agree with you, man. Agree with you.
All right. Thanks again for your time, and I give you the last word as we pull the curtain down on today's program.
Well, all I can say is that we look forward for more people furthering the education in business, and opening their own businesses, and bearing in mind that there is a pool of funds out there that they can tap into once they come up with the right business model and the planning is correct and so on. So, and for the investors, don't let you as I said, you work for your money, put your money to work for you. Don't just leave it lying down in a bank account where it loses value over time.
Okay, my friend. Go ahead.
And thank you for what you're doing.
You're most welcome, my friend. I must say, it's always a pleasure talking with you. Today is no different, and I look forward to doing this again with you in the near future. Thanks again, and do enjoy the rest of the day.
Okay, my friend, and you too. Take care.
Thank you. All right.
All right, bye-bye.
Bye.